Good morning, good afternoon, good night. Welcome to the BitLab Academy daily live stream. Man, we have just been cranking stuff out here at the Content Factory. That's what I like to call the Hit Network here, where we got BitBoy Crypto, Frankie Candles, the Players Lounge, around the blockchain basement. We put out so much content, it's hard to really keep things on schedule. So I apologize for starting a couple minutes late today, but we have some stuff. We're just getting so much stuff prepared for the BitLab Academy updates that are rolling out this month. The website, 25 plus new courses are starting to roll out, over 200 plus new lessons. I got BitBoy himself involved, Ben Armstrong, TJ, Frankie Candles, myself, AJ Pleasanton, AJ Writes Crypto, and a number of other people and some incredible guest experts that are going to be involved in that. So let me know how you're feeling. Let me know what you're seeing. If also, please shout out if there's any issue with what's going on with any audio or video. Please let me know, again, because I had to literally rush to get this all set up to make sure everything's good. Now, we've got to talk about what's going on in the markets today, man. We have bearish print with some bullish news. So how do we rectify this? How do we look at what's going on and really take in the data that's available to us and to prevent ourselves is what we really want to do. We want to prevent ourselves from losing money, right? Whether you're playing it bearishly and playing it to the downside, or you're playing it bullishly and looking for those upside pumps. Well, we saw as soon as the CPI print came out, I think it came in at 0.2% higher than expected. So the markets, as it came out, I mean, it wicked down several $100s and immediately was bought back up, and basically committed people to going short, and then it completely flipped. The bulls came in and it completely went the other direction, committed people going long, so it washed out all the people going short, and then it came back down, and now I have not even looked at the charts since about 8:35 because we were in here, me and TJ were in here filming some content for BitLab Academy. So I'm going to be doing this live with you all, seeing what's happened since basically 5 minutes after the CPI print happened. I'm going to show you methodically how we go through the data that's available, because this is no offense to anybody, but I don't care about the price. The price is the speculative. I'm going to turn this down just a little bit. There we go. The price is the speculative value of the asset. That doesn't give us any information. It just tells us what the general consensus is of where the price is of people that are trading that asset right now. What I'm more interested in is the data that's available to all of us in the markets, looking at a broad range of data, from on-chain to technical analysis to just a broader context of larger traditional markets, and how we can use all this as assets in our tool belt as traders and investors to make those consistently smart, profitable trade decisions and investment decisions over time. Sometimes no trade is the best trade. On days like today, I have one of my private clients was talking with me, asking me about wanting to get set up for a short for today, and I said, well, and I'm going to talk you through exactly what I told him yesterday about how I saw price action happening, and it's kind of basically right within what I was thinking, and we're going to talk all about that. But before we do all that, I just want to say welcome again to BitLab Academy. Welcome to our community. We have a wonderful community here. We don't do the troll thing. We don't do the people just talking smack and because they're bullish and I say something bearish, or because I'm bullish and they think something bearish. No, we're here to share our thoughts. We're here to be a community, and more than anything, we want to bridge that gap from beginner to pro. So no matter where you are on the spectrum of trading and investing, no matter where you are on that trajectory of understanding what's happening in crypto, whether you're a beginner or a pro, we have the content for you, because I want to make sure that we really bridge that gap and we bring people along, because if we want this ecosystem to grow, if we want crypto to succeed, then we need to make sure that we are putting our hand back and we're offering hands to those people that are coming into the space, and we say, hey, let me help bring you up to speed. And then all the people that are further along their journey, perfectly fine. There's plenty of content here on the BitLab Academy for you, especially on these live streams, of course, but then also within BitLab Academy itself. So I can't wait to jump into this. My name's Kelly Kellam. Welcome to the show, the daily show we do every day, Monday through Friday, 10:30 a.m. Eastern Standard Time. And make sure, please do it for that $30,000 I lost the other day. Hit that like button. hit that subscribe button, ding that bell. It's a very easy and almost inconsequential way that you can truly, as silly as it sounds, that you could truly help the channel just by offering that small bit of digital engagement there. Lets YouTube know that there's interest in this channel, and it puts it out to more people so we can help bring more people along. So you're helping the ecosystem grow by hitting that like button, smashing that like button, triple tapping that like button, hitting that subscribe button, and dinging that bell. And last thing I'll say before we really get into this is make sure you check out bitlabacademy.com, and we can actually jump over here. Yeah, I'm going to make sure this right screen was up. Come over to bitlabacademy.com. Make sure you sign up on the newsletter here. I'll be sending this out, I think, on Thursday this week. And a new thing that I'm going to be doing, it announced yesterday, not only are you going to be entered to win a free month access to the courses and the indicators, but you'll also get the newsletter itself, which I'm trying to not only give updates on what's going on with BitLab, but more so give you some free alpha, some things I'm seeing in the charts, some information about something going on in the markets. But then also by being a part of the newsletter, within that, I'm going to make sure you open it, make sure you read it, because at the bottom of the newsletter, there's going to be an area to vote on a couple different things that are going to be happening within the live stream. So you can help shape the content here. You can help, you can help focus me on certain projects you want to cover here on the BitLab daily streams. So without any further ado, I have to throw it back to all of you here. Shout out some names. See everybody that's here. We got Alex Green. Alex Green, I'm going to be reaching out to you on Discord because there's some thoughts and some ideas I have I want to include you on. We got Alexandra G, Matt C, Inso Mining, Karen Swigart Harris, so many people in here. King Peasant, I mean, so many people. Tim Abels. There's so many familiar names. We've only been doing this about 2.5, I guess 3 weeks now. Jason Rohde, and we've got such a strong community that we've built here. So shout out to everybody that is here at the BitLab Academy daily streams. So, as I said, I did not have time to build out what I was going to go through today. I knew what I wanted to do this morning, but we were busy trying to do what we could do to get this content out to all of you, these updates within BitLab Academy. So we had something we had to film this morning for one of the lessons there. This one was surrounded around blockchain. But so let's go ahead and jump into all this. We are going to look at what's going on. So make sure you're following BitLab Academy, which is at Academy BitLab, and then make sure you come over to my accounts as well. Follow me at Kelly Kellam. I share a lot of, on both accounts, we share a lot of wonderful things here, resources for you, as well as charts, as well as thoughts. But moving forward, there is a couple things I wanted to share, and I have to pull them up live with you. And I'm going to show you a little trick here. You see how I have these notifications right here across the top? If there's certain people that you identify on Twitter, or other people that are within the Twitter ecosystem that are in that, basically crypto Twitter, then when you go to their profiles, I'll show you a little trick here that I do that makes it very easy. You see when on these notifications, all these people that are listed here, I have basically people that I follow. Caleb Franzen's a great one example. You come here and you ting this bell, and then what happens is for each person that you follow that provides that content you really like to see every day, without having to scroll through a bunch of stuff, I can just click here on notifications and then only open the accounts of people that I feel like are providing very good information. So there was a couple things I wanted to share. Now, we'll start here with Stock Money Lizards. Stock Money L is what their handle is. But this is just something, regardless of where price action goes right now, if we're having a bit of a pump, but we have to ask ourselves, is this setting up for better prices for downward price action? Because we did get a negative CPI. A CPI is a consumer price index. It's a good way to gauge where we're at with inflation. It's a good way to gauge if prices are going up. It's a good way, prices coming down. This is sort of either ammo for hawkishness or ammo for dovishness from the Fed. So this number is a very important number. But despite all of that, when we're looking at this chart, I I just want to just emphasize this, because what do I say every day here on the BitLab Daily Stream? We need to look at the macro, we need to look at the midterm, and we need to look at the micro. And looking at this chart, what we're really looking at here, we're looking at the macro. So regardless of where we think it's going to go in the next day or the next week, we understand that we are setting up, we're still within if you really look at the macro as it is here, the history of Bitcoin, we're technically always been in a bull run, because this is just a push up, a pullback, a push up, a pullback, a push up. Now we think of in crypto, we think of the macro as the weekly and the monthly, and it is too, but it all has to do with how you're defining the time frames you're looking at. But the point here is, we are setting up, we are within an accumulation stage, setting up, coming into the next halving in around March or April of 2024, which, as we see preceding this halving, which is this line here, we tend to get some pumps into that halving, a little bit of a pullback, and then the massive parabolic uptrend. We see it, the push up, a pullback, massive parabolic uptrend. So are we going to come sideways and frustrate everybody out of their minds? It's possible, but I think what's more likely to happen is that we are going to have some choppiness in the area that we're at now, and then once we sort of resolve out of this choppiness, I think we will get some form of push up in the 30 to 45K range, and then a pullback that's going to tell all the bear. It's going to give fuel for the bears to tell all the bulls how wrong they were, and then they're going to be disappointed again when we find a base, and then we have a massive parabola somewhere north, hopefully in this next cycle above the 100K mark, but that's neither here nor there. That's too far out to project. What we're looking at is what's happening now. So let's go through a few more of these charts. I'm just showing this one here to show this is not hopium, but this should give you some comfort in looking at this bullish chart on Bitcoin over the history of Bitcoin, and that we are in a historically identified sort of accumulation zone as it pertains to price action and the time frame in which the cycles have worked. This is not even looking at technical analysis. This is looking at the time frames and price action as it relates to the halving. So bullish setups for the macro picture. Now continuing down here, there was a couple other I wanted to pull up. Okay, this is interesting. So GBTC, for anybody that doesn't know, GBTC is a traditionally traded version of Bitcoin. It's essentially a trust that they're buying a bunch of Bitcoin, and then you can buy Bitcoin through the traditional marketplace. So it's a sort of, I don't want to call it a hack. It's not a hack. It's a sort of an easy way for institutions and retail alike to participate in Bitcoin and crypto without having to go onto this oh so scary and oh so foreign crypto marketplace. They can do it through their traditional asset money managers and such, where they can buy GBTC, and they're getting basically shares like stocks of the trust that is GBTC. So the interesting thing about this is that because of everything that's played out over the last year and a half, with the lack of confidence that is sort of brewed into the market over the overall of 2022, with the cascading liquidations, with the issues, with, so many different things that have happened, the bankruptcies, from Celsius to Voyager to BlockFi to Three Arrows Capital to FTX. The list was just ridiculous over this last year. It's amazing that we held at the 16K level, to be very honest, but there was a spread created between GBTC and the equivalent sort of value of Bitcoin. So there's been a massive discount, as you see here. It got down to, down to minus 48%. So almost, you're basically, people buying GBTC were getting Bitcoin on the traditional marketplace at a discount. So this is showing sort of lack of interest on the institutional and sort of crypto wary side of being involved with crypto in Bitcoin, because we're seeing this massive spread. Now, when interest is coming way back into the market, we'll see that this will, instead of being a discount, this will go back to being a premium, meaning that it will cost more in the equivalent amount of GBTC than the actual value of Bitcoin at that same rate. So right now we are seeing that this is starting to tick up, but we still at a minus 40% discount on the net asset value. So this is just something that we should just be aware of, but also you can take advantage of if you are trying to diversify your portfolio and looking to, and this is not financial advice, this is just considerations you should keep in mind, is utilizing, taking advantage of, if you're somewhat questionable about Bitcoin at a certain time, then this is another asset that you can look at, that you're getting exposure to Bitcoin on the traditional asset side of things, but you're also getting it at a discount, not only in the discount where price is so low on Bitcoin, but you're actually getting it at a lower value equivalent. You're getting it at a discount. You're getting more for your money on the GBTC discount as it stands right now. Now, we're going to go out of this. And there was something from Game of Trades I wanted to share with you all. Let me see if I can find it quite quickly here. Pew, pew, pew. I will say this, with the heat map of the S&P 500. This is interesting, coming from the CPI read that we just had. This is actually looking. This is at 10:15, so about 30 minutes ago, a little over 35 minutes ago. But this is looking like there's actually more bullishness in the market than one would have expected, with a negative, and actually I won't call it a negative print. That'll be confusing, because we came in over expectations on the CPI, which is a negative sort of connotation for the bulls. However, we're seeing some bullishness in the market here with it seems just by a quick glance that we're having a bit more green than red, but it's still a bit choppy here. So I would have expected this to show a bit more red across the board here on markets, but we are seeing a little bit of a bullish narrative develop out of this negative print. And why do I say it's bullish even though this looks choppy? Because this isn't dominated by red, because this isn't showing that the market took that news and said, okay, let's short, let's get out of the market. We're actually seeing bulls sustain their pressure at this level on traditional markets. And we're going to be diving in here to Bitcoin here in a second. Now let's see, I'm just going to type it in, Game of Trades. Game of Trade. I love this account. I don't know where this metric was. Oh, here it is. Okay, so we're seeing optimism and pessimism spread, and this is a little bit, as much as the markets are pushing up right now. Looking at this optimism basically being overheated, and we see the relationship. Anytime we're looking at any of these charts, what we're trying to find is regular and repeatable correlations between that action on the metric and what's happening in price action. And as we see here, when this gets up above this level here, this red level, we can see that this is also correlated with this with the assets falling. Same thing coming up here, touching the level, falling. And we're in this level here, and we did get a small pullback. So although there is some bullishness in the market, one has to wonder, just because you get green candles doesn't mean you're going to have green candle continuation. I'm going to say that again. Just because you get a couple green candles does not mean you're going to get bullish green candle continuation. Sometimes market makers, institutional investors and traders with big money, smart money, whales, will push prices to a certain level to get people committed to go that direction, meaning put in their longs, put in their leverage longs, they're buying the hype. They're buying that green candle hype just to then meet resistance again. And then the bears, the bulls with the smart big money bulls can then reverse price on them. And now there's liquidity in the market, because as it moves the opposite direction, those weak-handed people, those retail, which is not going to be you because you have a plan, then they capitulate out of their coins at the smallest sign of weakness, and now there's liquidity at that level for then the institutional smart money big players to take advantage of that liquidity to then move the price to the downside, and that now they have a short at a higher price. So we need to look at all this stuff in context with what's happening in the markets, not just the 1 or 2 green candles on a 15-minute chart. So we need to look at all this. We're going to continue on here, and we're going to be going through a lot of charts today, so I'm going to knock all this stuff out early. Here we go. So the dumb money confidence level, look how high this is. And this, of course, this is on the SPX, basically S&P 500. And we can see that this has been related to near market cycle trend tops. Same thing here. And this is dumb money. This is not what we're going to be. We are graduated from being dumb money, because we're not going to trade. We're not going to invest using our emotions. We're going to use the data that's available to us and paint a clear picture. And if we don't have a clear picture, we don't take a trade. We don't take that investment decision because we don't have a clear picture. We want multiple time frames with multiple signals that agree that this direction is the momentum and the pressure is moving in this direction. And we want to, of course, we want to catch that momentum as early as we can, but we want to do it when we have the confluence of signals across all of the charts. So we see this here. We see this dumb money confidence, near market cycle tops, rolling over. So now coming back, we got a couple more, and then we're going to jump right into the charts. We're going to do a lot of charts today. So that's all we can do there. But again, I have a little issue there. Okay, let's go ahead and jump into the charts. All right, let's see where we're at. I'm going to pull up one more chart here. All righty. Now, see, I like to have mine all preset, so now it makes it very easy. You can see a lot of the stuff that I'm looking at here. Okay, so now we're going to go to auto. We know the broader context is a downward market. We know our macro, midterm, micro. So this was our macro. Now we're going to come down to the daily and see where we're at. Now, this is what I've been talking about for the last week, at least. When we pushed up to this level, I was waiting for some sort of pullback to at least test this area right here. Test this macro. Why this line? If we zoom back out, we see this line is the macro downtrend resistance. What do I mean by that? It is the level at which price action, once it reached this trend line, has failed, and the bears took over and dominated the bulls with downside price action, rejection off this level, and we come back up to it. We've broken through. We need the confirmation. We need the bullish confirmation of this move here, meaning we break through this, come back. Can the bulls hold this level? If so, then this is officially a start of a bull trend, if we can do that. But we don't have that yet. We have tested it. We have tested this level. This is also previous price action here, okay? And I do want to show you, this is on the 3-day, and look at this BitLab trading stack, called this perfectly. We pushed right up into this level, and if you can't see, this level right here is a golden pocket from this move right here. So we've pushed up into this golden pocket, and right as we touched that, we also got 1, 2, 3, 4 bearish divergences on the BitLab market. The BitLab trading stack. This specific indicator within the stack is the BitLab market intelligence. So we have momentum bearish divergence, on balance volume bearish divergence in money flow, bearish divergence in the hidden volume. All right as we push into the golden pocket, and these are very regular points that when price action breaks down from a level, that price will at least visit and test. Sometimes we'll break through, but like an 80-something% rate, price action will at least come up and test this level. And if the narrative is going to continue bullishly, it will break through it. If it's going to continue bearishly, then it will find rejection here. Now we're in a bit of an interesting situation here, because I'm going to kind of slide over here a little bit. We're in a bit of an interesting situation here because we did reject off of this level. But we also, now we're trapped between this level right here. And this is, in a way, a very wide broadening wedge, if you want to look at it that way. But we had a broadening wedge here, which was angled to the upside, which is, as you can see this here, and this is angled to the upside, which is a bearish pattern in this very smaller time frame. We broke down and we found support on something we wanted to find support on, which is this previous high right here, and previous high right here. And it's also perfectly confluent with where this EMA ribbon's coming up into, as well as this macro downtrend resistance. So let's zoom in a little bit. We're going to look at a smaller time frame on Bitcoin, see what we're thinking, what's going on here. And then we're going to look at a number of other assets. So everybody, let me know in the chart, in the chat, and if you're watching this later, if you're watching on a Hit Network, or if you're watching the replay of this, put a comment wherever you're watching, but also put a comment, post a comment below the video. I like to see what different coins people are looking at, and we're going to try and chart a bunch of them here live. So those, it does pay to be here live because you get a lot more interactivity here, and you can be a part of the community. So as we're doing that, make sure you hit that like button, hit that subscribe button, ding that bell. So what we're going to do here, let me know in chat a bunch of coins, and I'm going to be going through a bunch of coins here in a few minutes. Over here, come over to the 2-hour chart. Okay, now look at this. We had a descending broadening wedge that I had mapped out the other day. And what is a descending broadening wedge? That's this descending. You see how this is a wedge? It's broadening. It's the part from which it started to the part at which it ended is getting wider in width, as we can see here. And because this is angled to the downside, this is on this smaller time frame is a bullish structure because it's angled to the downside. And the bulls are making high, this is pushing to the downside, but the bulls are fighting back up, and the bears push it down further, and then the bulls push it up higher. So that's how we're getting this broadening wedge, and that's why it's bullish, because the bulls are fighting higher each time. And what happens? Kind of fakes out, comes back in, and then breaks to the upside. Now we are still within, we can barely see it, but we're still within this EMA ribbon. And we tried to push by it, but got rejected and came back down. Now, we are seeing some bearishness on this move. Now, this is a 2-hour. So, of course, the CPI data was within this candle. Was within this candle. And we can tell not only by the time that we see here on the bottom, but we can tell by this massive downtrend that this massive downward price action that happened within this 2-hour session. All the way down here to about 20, we can see the low is, we can see right here on this chart. You see your open, high, low, close. That's what these are if you were not aware. So once you put your mouse over a candle, we can see that. So we see the low on that was 21,505. I thought it went lower than that. I thought it went into the, I guess this is on Kraken. I thought maybe it's lower on the other chart I was looking at. 21,505. It opened at 21,817 and broke all the way down within the CPI data down to 21,505. And then the bulls ate it up very quickly. But let's see what happened in this session for real. We can bring up higher resolution on this and see everything that happened within the session just by going to a smaller time frame. Because each one of these candles, and this is for the beginners, each candle is representative of the session of time that we see that this chart is on. In this case, each candle is 2 hours, but we come down here to the 24-minute. Now each candle is 24 minutes. So this is everything that happened within that. So 7 o'clock, let's see. This is where that 2-hour candle that we're looking at that had the huge move up and then the huge move down and then the huge move back up. It basically happened from here, which is 7 o'clock, all the way to 9 o'clock, which is here. So we're seeing this is the price was pushing up into the CPI data. Okay. And then as soon as the CPI data came out, which was within this candle here, then we got a massive, basically, people are setting up higher positions for shorts. And then we get that short, but then the bulls, right as we entered this price action support zone right here, the bulls came in very strong and ate this back up, got us right back above this EMA ribbon. Then the bears tried again, took this further down, and we can see the relative extrema right here pushing out of the cloud, which means this is when this means the bears the bears took they had too much leeway to the downside, and this is basically bullish pressure when we have this extended to the downside outside of this cloud. And what do I mean by the cloud? You see this shaded area. When this is out of the cloud, this was bullish pressure. So this was letting us know that the bears are a little overextending this. And then we get the MACD and stochastic bullish divergence here, and we're seeing, especially as this candle broke back above this, especially that this was likely going to reverse back to the upside. And we also have this gray area here, meaning that this wasn't overheated to the downside or upside. This was neutral. And so we get this push to the upside, but then immediately we get followed by I'm going to shrink this down. We get followed by on-balance volume and hidden volume divergence here. And now the price is doing what the price does on a day like today. And this is why I tell people, unless you are a professional trader, you don't really want to get involved in trading the hype and the fear and the FOMO and the greed and the excitement of a data point like today, because even if it's positive, the price can go the opposite direction and FUD people out and fear people out of their trade. And they're only doing that to get that price to a lower spot to then rocket it to the upside. To then people jump back into that green candle, back to the upside. And then the price pulls back, they get out again. So they're literally shaking you out. You don't want to trade on this sort of data unless you're already in a position from before. So we have all this movement today, but if you're in the position down here, then if you have a price target in mind and a strategy in place and you have your stop loss set, then fine, stay in that trade. That's completely okay. That's up to your strategy. But if we're looking at this 8 hour, I'm not going to actually look at that because this has 7 hours and 53 minutes to close. If this was closer to closing, if this was, say, 30 minutes to closing, this would be bearish. This would be looking like a rollover. We're pulling up the chart. Chart's pulled back up. This would be looking like a rollover because we have a large momentum candle that then would be having essentially like a doji candle, which is almost no body and all wicks. And we can see this has 7 hours and 53 minutes left. So we can't really look at this structure that way because this session is not fully sort of developed yet. So we're going to break this down into smaller resolution. Let's go down to the 2 hour again. We can see, okay, now this has the same setup with almost 2 hours left. So we can go down to 30 minutes. Okay, so this is actually looking like it's trying. There's not a lot of clarity here. So this tried to roll over, but then immediately we got a hammer candle at the bottom of this trend here. So as this is rolling over, this is signifying that this is likely going to rebound from here, because we see this bearish price action that is pushed way deep into the EMA ribbon. But then the bulls ate it all the way back up. So this is saying the bearish tried, but the bulls dominated this candle because we can see this long candle below it that was how far the bears pushed it, but the bulls were able to eat this back up, signifying that this is likely a trend, this very short-term trend. I mean, not the macro trend. This is a very short-term trend reversal candle. Or high likelihood of reversal because the bears tried and they failed. The bulls dominated this candle, and we're starting to see that play out here. But coming down, we can look at this with a lot more clarity here on the 3 minute candle. Yeah, we can see that. You see how much clarity you get when you go between different time frames? Now look at these gaps. These gaps you do not see regularly on Bitcoin because the market trades 24/7. Of course, the CME gaps happen because that's a traditional institutional sort of trading component of Bitcoin. They're betting on the futures of Bitcoin, and they're doing it with the same time frame that traditional markets are open, and they open early on late in the evening on Sunday, and they close on Friday. So you get those gaps over the weekend, and over the nights and stuff. But what we're seeing here is, on a 24/7 marketplace, we're seeing this is evident of volatility in the marketplace because we're getting a gap here. So what I'm saying is, because there's volatility in the marketplace, there's confusion about which direction this could go. I think, and I was talking with a friend about this yesterday, another analyst, my speculation around this is that because because 2022 was such a frustrating year with all those cascading liquidations, with all just the nonsense that happened throughout the entire crypto ecosystem. And not only the crypto ecosystem, the traditional markets also suffered, a lot of downward pressure with the quantitative tightening coming back in through 2022, with the inflation numbers through the roof, with a lot of the relief funds that were coming from the pandemic, basically sort of drying up. So there's less liquidity in the market. Everybody's frustrated as they can be from the last 3 years. And I think in an irrational sort of sense, the markets right now are being irrational in a sense, because everything suggests, other than Bitcoin, which is, we look at Bitcoin on a 4-year cycle sort of trajectory. If you look at the traditional markets, things are being very irrational right now, because as things are laid out, it seems as such, by historical sort of analysis, that markets should not be having the relief rally that they're having, especially have it sustain, because this looming recession that is essentially sort of, I don't want to say cooked into the markets, but based on the historical sort of regularity of all the metrics that hit before a recession have hit, that markets are being irrational right now. And I think it's because people are ready for, they just, they're hurting and they want the assets to do well. And people are just getting involved in the markets, wanting it to go up. So the biggest sort of caution I will give to all of you around this is that don't get caught in a massive bull trap because you went long and you forgot about it. Unless you have a 10-year time horizon, that's completely fine. But be patient and be cautious anytime we're coming near any major resistances, because we are acting bullish in a very bearish narrative market right now. So what we're seeing here, we're going to go back to the charts. What we're seeing here is that let's do a fib here. Option F or Alt F if you're on PC. That gives us the Fibonacci, and we can see. Look at this. This price came down not only right through the EMA ribbon, bounced right, it pushed down just to the golden pocket. It's so amazing to me how often this golden pocket is hit all the time. And now we can also come. From here, option F, from the top there, down to the bottom there. And we can see that this is finding resistance right at the golden pocket, going back to the upside. So the market is looking like a heartbeat right now, meaning you have a push up in pressure, you have a push down in pressure, and you come back to equilibrium. So that's what the markets are doing right now, because at the end of the day, because the market is acting bullishly in a bearish narrative, and now we get bearish news, but the markets are kind of responding in an interestingly positive way comparatively. The bulls are making every attempt they can, and they kind of get exhausted because the momentum starts waning, because people are trying to make that move, and they get committed going to the upside. And now the bears are trying to see which way the match is lit will catch fire. That's essentially what's happening. We're seeing this push and pull between the bulls and the bears to see who's going to dominate the narrative. Now, in this case, if I was just looking, let's say at the 15-minute chart, this is looking more bullish. This is looking, delete that. This is looking more bullish than I would have expected. However, we did find support on that massive downtrend resistance. We haven't fallen below it, and I have this drawn in a couple different ways. We can go. Oh no, it's right. Nope. Where is it at? I have too many charts. Alrighty. I did a whole, this is from the newsletter the other day, but we're finding support above, basically in the region of this downtrend resistance that's flipped to support now, as it looks like. Volume has come in tremendously here with the CPI data, but if we look at this, we're actually going to pull up the other chart so it didn't have all that wording on it. If we look at this with all of the indicators, we can see that we're going to go to 3 here. There we go. We are seeing a little bit, so we're having bearish divergence here on the volume, and we're getting a little bit of follow through on that with the breakdown. As you can see here, we can see that this is looking overheated, which is what this red wave is, and that's also corresponding right when we have this pullback, as well as this relative extrema bearish divergence that we can see right here. So this has been really calling this well on good take profit zones. So the way I like to think about it, when you're looking at a trend, if we're in a downtrend, which on this time frame on the 1 hour we are, then each one of these bearish divergences on the top is a good place to look for an entry for a short. And then when you see these bullish divergences on the bottom here in a downtrend, these are basically essentially good identifiable spots for take profit zones, especially when these are lined up with this print of low or high. So this is a low with a good take profit. So you can see how you could play this. Good entry, good take profit. You know, you could even wait all the way till you got the low because the low print wasn't there. You see how that works out? You can find these points of confluence. But because we've broken back through, this is on the 1 hour chart. Look at this. We've broken back through this EMA ribbon. And it's still looking questionable to me. So for me, what I'm looking for is for this to break back through, especially on like a 4 hour, because if we're right here on the 4 hour, we look at the EMA ribbon, we are below it. We got 4. Oh, we're getting 4 right now, but we have 3 hours and 44 minutes left. We're getting 4 bearish divs on the 4 hour candle here. This is starting to look overheated. If we get a bearish div on the hidden volume here, I would be that would be sort of my entry level for looking for downside price action. So while we are getting a bit of a bullish impulse here, we tried to really get it, but we could not get through the EMA ribbon. If we get rejected here, then we're definitely going to be looking, very likely going to be looking at coming down and testing this level again, which is a downtrend resistance, now support right at $20,600. You know, between the 20,000 and 21,000. If we lose this level, then I'm looking for filling that CME gap at $19,900. So that's the level I'm looking at there. Now we're going to run through a couple of other charts, and yeah, absolutely. Make sure you smash that like button, hit that subscribe button, ding that bell, join our community. We're trying to break down charts and concepts so people can really understand what's going on. So now I did see, let me zoom up here on a bunch of you guys typed in some coins. I think you did at least. I don't see any coins. But is anybody taking it? Did you long or did you short before the CPI data? And similarly, did you long or short after the CPI data? Or were you a smart conservative trader and you sat on your hands waiting for this to pick a trend direction so that then you could capitalize on a highly profitable sort of trade decision because you waited for the data to line up? Let me know what you're doing with this, with the market today. I'm still looking for, okay, near, we haven't done near. We did Matic and Algo, and we did a bunch yesterday. So now we're going to look at near. So I'm going to turn off. Look at how good this is amazing how good this calls the highs and the lows, as well as the bearish divergences and bullish divergences to give you a good indication of pressure reversal to the opposite direction. Using that and combined with these other indicators is really, it really is great. So if you are interested, come over here to BitLab Academy, click on this link right here, the indicators, and get involved. There is a code right now that you can utilize, which is relaunch 15. Relaunch 15. That gives you 15% off your first month of courses and indicators, both separate subscriptions. But so use that. But we're looking here at the 4 hour on near. We're seeing this similar thing that we saw in Bitcoin. I'm going to double click on the chart so we can minimize the other stuff. Now, what I'm seeing here, I hate it when it does that. What I'm seeing here is that we rolled over. We had a kind of a head and shoulders here, but the shoulders are almost as big as the head, so almost a triple top right here. Rolls over. Now we're trying to get back up. We get a rejection here in terms of a lower high, and then we do get this attempt to the higher high here, but it immediately rolls over, and we've fallen back through the EMA ribbon. As soon as we got into it, we used it as resistance. Now we're using the entire EMA ribbon as resistance, and you see how this time it pushes all the way to the top. and the next time it pushes, it's starting to collapse and roll over as the bands here in the EMA ribbon are starting to flip on themselves, meaning it's bullish to bearish. And as it's flipping, this is getting more constricted, and this is not pushing as high into it because this is pushing above. This is not pushing above. Now this is only pushing to the middle of the EMA ribbon before it's finding resistance. So this is inherently bearish as it stands right now. We're looking at the 4 hour. So now let's come down to the 24-minute. We're going to zoom out just a little bit. Now I'm going to hide all the bearish divs and flags and stuff there. So I'm seeing a bit of a trend line there. Now, in order to get these trend lines up very easily and not clicking over here, I'm just doing Option T. If you're on PC, it's Alt T, and then you can click on your chart and you get your trend lines. So we are getting a falling wedge here, which is a bullish structure. But we are pushed up against this resistance. So we need to look at our other indicators. And right now, what we'll do is we'll pull up the MACD, RSI, and show you some of the traditional indicators. We're not just going to, be showing only BitLab indicators. I like to show you a variety of stuff because there's a variety of people on here using a variety of different tools. So let's make sure everybody can be included. That's what this is about. This is about bridging that gap from beginner to pro, using a variety of tools throughout the space and different concepts, and letting you know as we're walking through the charts and the setups how we're going about really breaking these things down and how we can engage with these markets. And some of the pros even. I remember after I did the Tradingview, the pro guide to Tradingview, I had about 15 different pro analysts hit me up and say, bro, I had no idea about half these quick keys. You just saved me a ton of time. So I do want to shout that out. Make sure you head over to BitLab Academy YouTube page, which is youtube.com/BitLab Academy. If you come in here to playlist, come down here to view full playlist, go to this pro Tradingview guide. It's a 12-minute video. It shows you a lot of very easy, quick tips how to navigate the Tradingview very easily with all the quick keys. So now I'm going to double click on this, hide those other indicators. So we're pushing into this, the 4MA that I have here, the 50, I think it's a 50, 20, 50, 100, and 200. I believe that's a VRBP. 21, 50, 100, 200. That's what these bands are here. These are the moving averages. The smaller ones are much faster moving, which are, as you see, and the longer term time frame ones like the 200 are the very slow moving one. But what you see here, what I want to point out here is two things. We have the VPVR, which is the volume of the visible range here on the right, and that's showing you all the volume that's transacted at the price level that you see to the right here. And you can also see it playing out on the chart. You see all this price action right here, and you also see this giant volume node. This is because there's a lot of volume. There's been a lot of different coins that have transacted of near on this in this sort of price range. But what we're really seeing, now look at the confluence. We're going to zoom out just a bit so we can see that. What we're really seeing here is that price action has pushed up and it's finding a rejection here on this node. And not only is this the point of control, which is what this red line is coming out of this, the VPVR, but we're also, we did break past the 200, this is the 24-minute, so this is a 200 moving average here, but we got rejected at the resistance just above that, which has been, fairly largely forming descending wedge. So not only do we find resistance at that level, and it's also confluent with this volume node right here, and it's also confluent with where this 200 moving average is, which is a very big deal when determining what sort of trend continuation or rejection you're going to get. Because if we get rejected here, then I'm definitely looking at a target down here on near down in the 207 sort of range. And then, we'll have to revisit what the metrics look like then. Now, if we pull up the Bollinger Bands, we can see we are, there we go. We can see that we got overextended outside of these bands, which show essentially, for people that don't know, Bollinger Bands have a 20 moving average in the middle. That's what the middle line is. So you can have that 20 moving average just by pulling up the Bollinger Band. And then the bands basically are two standard deviations in price away from the band. And what you're getting is these bands are formed by the average volatility, the average price movement of where price has been over the last 20 candles. So when you're getting this constricting, that means that the volatility is starting to shrink. When you get them expanding, that of course means volatility volatility is expanding. Now, when we push up way deep into and break this sort of line and expand it very wide, at some point we are going to need to come back and likely test this 200 moving average right here. And this is also confluent with the high volume node that we have here. Essentially, the middle of it would be about the $2.16 sort of cents. So that's what I'm seeing on near right now. I am looking for a rejection at this level, most likely to come to the downside. If we do break above this, if we do break beyond this and get find support again on this level and then push up, I'm looking at a level right about right here. Now I'm going to do option J, which gives me a horizontal ray, alt J if you're on PC, right at this level. This is also confluent with where the next shelf of price action is right here. So I'd be looking at a $2.33 on near if we do break above this and find support to the upside. Now, let's see, ADA. All right, let's do ADA. Who's my ADA gang out there? Who's holding ADA gang? Who is somebody dumb like me in 2017 that held like 600,000 ADA and then sold it when it went from 1 cent up to 5 cents? That was, you know what? It wasn't that dumb because I did make a 5x profit, but man, that was my biggest lesson in patience over time, because man, I ended up getting back in at like 60 cents or something, and then riding that up to $3. And then I rode it all the way back down to $1.40 or something before I sold. But then, man, I got way back in down at the like 33 cent level, or 31 cent. So now let's look at ADA. Okay, let's go to zoom out here. We're going to turn off the Bollinger Bands. And I didn't even look at we're going to remove all drawings. Okay, we're just going to look locally. We're going to use moving averages and what's going on with the MACD. Where are we at? MACD, RSI, and stochastics. Okay, expand. There we go. Now, first thing I'm noticing, not only is price rolling over, but we're also seeing the MACD rolling over, meaning that the momentum is starting to shift in favor of the bears, especially if this crosses back over. We found resistance just below this point of control, which is this line coming out of the VPVR, because there's been a lot of price action trading there. If we take a fib, option F, from this point, we drag it down to the bottom. Actually, I'm going to take it from this point right here, because this was the move. Yeah, right from this point. And we got rejected right at where this, just below where this previous price action was, right here in terms of the high. We got rejected just below that, kind of where the high was here, as you can see on this candle. Zoom over right here, but we did get rejected right at this golden pocket. And I did it from this point here, because this was the primary move that we broke down from on this. This is on the 3-day. Let's look down to the 30-minute. Sorry, I did not look at I didn't do what I asked you to do. Look at all the details on your chart. So what we're going to do from right here, option F, drag this down. Now we're going to drag this over. We're going to minimize this, and look at that. I just did the previous sort of top of where the price action broke down, drug it to the bottom. I did not plan this, and look at this price action. It's touching that golden pocket. I'm telling you, these golden pockets are everything. If you haven't yet, come in here, draw a fib. You can find it here on the left, or you can do option F, pull one. If you double click on the fib, come in here and set one of them to 0.618, or just turn it on and set another one. You'll have to change one of them to 0.65. That gives you your golden pocket. You can customize colors and all that stuff if you want. Turn on or off backgrounds. I turn them off just to make the chart cleaner. But we can see with this golden pocket, from this high to this low that we went to, we are testing right now at that golden pocket, which is also confluent. Let's see what's going on with volume if we zoom out a little bit. So we came right up. There's a lot of choppiness in here because there's been a lot of price action trade in this area. So it's not going to give you a lot of clarity as to where, just specifically on volume alone, where things are going to go. But we do see right here that we did kind of go through this this gap that we formed locally on price. Gap meaning that there's been low volume traded at this level, which we can see as we're looking at it right now. There hasn't been on this visual range a lot of price action. We just have a candle wick through, and then similarly now we have a candle wick back through. Some people like Traders Reality They call this like basically vector candles, meaning candles are just moving through this, and people aren't able to get, they weren't able to really set their orders to take advantage of those price levels. And so when we come back through this area right here, then there's no interactivity of price action and no previous bottoms. And so price action went all the way up until it found a natural level of resistance, which on charts very regularly is the golden pocket, meaning you go from the top of the move, you drag it down to the bottom of where that low was, and it draws this map, and we see that this is where the golden pocket is, which we're going to delete this right here. And we see this golden pocket is right at the 38 cents level. So now if we zoom in on this, we can see that the RSI got all the way up here to where it kind of overheated. Stochastics, which are a much faster momentum read, are actually rolling over here, which is suggesting maybe some downside action on price. The MACD on the 30-minute is starting to roll over, and we can tell because look how much momentum this candle is from red to green. Now this green candle, which is the distance, this is measuring the distance between these two lines, and we can see that this is expanding, but now we're getting less of an expansion and far less of an expansion. So this is looking like it's trying to roll over, but that's not to be determined yet. But we can come down to the 15-minute and see with more. Yep, look at that. 15-minute gave us more clarity. It is starting to roll over. That's where we're getting our lead. Got the rejection there, and so what I'm looking for is a pullback down to the 36. Down to, I would say, first stop would be around 36.49 and down to 36.31. That's if we get downside action. Now on the flip side of this is kind of a very ugly, it's trying to be a bull pennant or a bull flag, but we're not getting the clarity on how this the pennant or flag structure is. So I'm not necessarily calling that yet. Let's look at how it looks on the 24-minute. If this does pan out to be like that, we can do Option T from the bottom here to the top, and we can drag this and see what our target would be on that play out. And that would be back up to this previous top. We can tell because there's a 1 there. That's where this was measured, and that is confluent. We're going to double click here, get some price action in there. Look, we're looking for volume. Yeah, if this breaks here, although this flag says this is a target, I would be looking for a pit stop right above this at the 38.66 level, and then 39.85 with this volume node here. But that's what I'm seeing. I'm thinking it's more likely than not. Let's pull this up. The last thing we're going to do, pull this up with our BitLab trading stack. We are getting a momentum bearish divergence on the 24-minute. This is looking overheated. The volatility index, RVGI, is flipping to the downside, showing that it's kind of struggling at this level. Bearishness may be coming in. Let's go to the 1 hour and look at this. Okay, well, we broke back through the EMA ribbon, so that is bullish on this note, but this is looking overheated. So things are looking, looking here at Gala and Algorand. Things are generally in a bearish structure that are fighting every tooth and nail to be bullish. So what I preach right now is to be cautious, have tight stops. If you have an exchange like BitGet or Femex or some of the other derivatives exchanges that you're trading on, explore and utilize trailing stop losses. If you don't know what those are, let me know if you know what trailing stop losses are. If not, I'll make a video about what they are. Essentially, when you set the order, you can make it have a trailing stop loss. So once it goes up a certain amount, then at any point, if it retraces, let's say $50, it has a trailing stop loss behind you that moves up along the way. So you don't have to change your stop loss. So as the price goes up, your stop loss continues tracking it behind. And as soon as it pulls back $50 or $100 or 3 cents, whatever it is you're setting for your assets, then it stops you out and helps keep you safe and catch as much of the move to the upside as possible. And if you don't have those, then set your stop losses and be paying attention to the charts, because on a day like today and over the next 2 days, markets are going to be volatile. We're going to start to see what the established trend is going to be into the next three or 4 weeks. The trend that's determined that the market decides is going to be the narrative out of that CPI data. Are they going to discard it and the bulls will rally? And if they do, they will start to rally hard. If this is just a setup for shorts, then we are going to see a strong pullback, and I'd be looking especially on Bitcoin Bitcoin down at that CME gap level, and the 200-day moving average, which is down there about 19,700, 19,900. But that's all I got for you today. Big love to everybody. Again, my name is Kelly Kellam. Welcome to the BitLab Academy daily stream. I love and appreciate all of you. I hope we can all just encourage each other, share our thoughts, post in the comments here in the live show, here on the BitLab Academy live show. Let me know a couple topics or a sticking point that you may have, because I want to cover the stuff that you guys want. And post the comments below if this video, if you're watching it after, if you're not watching it live. But with that, hit that like button, hit that subscribe button, ding that bell. That's all I got for you right now. I hope you all have a wonderful day. I'll see you in tomorrow's video. Adios. Adios, muchachos. Thank you for watching. Thank you for being my friend. Adios, muchachos. Thank you for watching. Thank you for being my friend.